Hello and welcome everyone to the AFT Podcast. I'm your host, Sriyoshi De. Vehicular emissions and their impact on global warming have been a key concern for many for quite a long time. As part of the European Green Deal, with the European Climate Law, the European Union has set a target of achieving climate neutrality by 2050. This requires current greenhouse gas emission levels to drop substantially in the next decades. As an intermediate step towards climate neutrality, the EU raised its 2030 climate ambition, committing to cut emissions by at least 55% by 2030. The program is known as Fit for 55. To know about the Fit for 55 more, today we have Monika Punshi with us. She is Senior Research Analyst in the Powertrain and Compliance team at IHS Markit. So hi and welcome, Monika.
Hi everyone.
So Monika, what do you think is the impact of the Fit for 55 proposal on the EU automotive market? Also, how do you see it impacting the pattern of investments by automotive manufacturers?
So, thank you everyone for inviting me for this session today. As she has explained, on 14th of July 2021 this year, the European Commission has announced a proposed legislation in which they are proposing a 55% reduction in the CO2 targets in the light vehicle emission category for the year 2030, and that's based on the 2021 levels. And from there on, there's a transition to 100% reduction by 2035. So this proposal for light vehicle, it's a part of a wider package announced that day. That package is called Fit for 55. And that is aimed at reducing the greenhouse gas emission across the European Union by 55% by the year 2030. So as a consequence, if this proposal gets approved by the European Parliament, it will mean that all new cars registered in the year 2035 will be zero emission vehicles. This is going to have a very massive and a significant acceleration towards electrification by the car manufacturers and the battery manufacturers in the Europe. So based on our latest forecast, which was released in 2021 H1, we believe that 40% of pure battery electric vehicle share would be required to meet the 37.5 target by 2030, which is the current legislation. But now under the proposed legislation, we see that this 40% needs to be increased to 55% of pure battery electric vehicle share by that year. It is also predicted that this is going to have a significant change in the demand for lithium-ion batteries. So under the current legislation, it's close to 350 gigawatt hours, but with the proposed legislation, we expect it to reach about 468 gigawatt hours. So it is also expected that there's going to be an additional investment required both by the vehicle manufacturers and the battery suppliers. So based on a very generous estimate, it is estimated that somewhere about 8 to 10 billion dollars of billion euros would be required to meet the additional capacity by the battery manufacturers. While for the vehicle manufacturers, this should be about 12 billion euros, which is going to be majorly towards the procurement of battery packs and other components and the platform expansions. So now a very major and a very linked question to this is the tipping point. So what is basically tipping point? It is the break-even point based on some parameter. That parameter differs among different industry professionals. It could be the price of the vehicle, it could be the cost of the vehicle. So looking at it from the lens of a cost professional, we believe that with such huge acceleration towards the battery electric vehicles moving forward, we believe that towards the end of the decade, we should be seeing a tipping point between a battery electric vehicle and an equivalent IC benchmark vehicle. So the major reason what we see is basically the economies of scale at the production plants, the supply chains, and the innovations. So when I say innovation, it's majorly by the battery manufacturers and even the vehicle manufacturers towards working together towards better and improved chemistries. We've also seen some recent announcement by the pack manufacturers for new factory plants, for new battery plants, for expansions, for the new plants, and be it the battery manufacturers from any region, for China, for South Korea, for Europe, for US, there are huge investments going on towards the R&D space. And then this gets translated to the battery pack prices. We expect that the battery pack prices should be getting reduced by about 35 to 40% in the 2030 from their current levels. And when this gets reflected in the price of the vehicle, it would further scale up the scope for end consumers to buy more of BEV, and that will become financially attractive to them. So when I'm talking about all these investments, it basically covers capex, opex, R&D, and also other sorts of investments which are going on. But we've seen a recent change, what we call as the issuance of green bonds by automobile manufacturers. Now, what is a green bond? It's very similar to a traditional bond. However, the the use of such bonds is basically reserved towards the climate and environmental projects. So, with the intent to better direct the financial and capital flows to the green investments, European Commission has established a standard for green bond. So it's a very high quality voluntary standard for bonds financing the sustainable investments. And that's based on the recommendation of TEG, which is a technical expert group on sustainable finance. So basically, it ensures the transparency of the use of the proceeds through detailed reporting and external validations. So over a couple of years, we've seen some car manufacturers in Europe and even globally that have issued such bonds. And they've also committed that such funds would be utilized towards battery electric vehicle and other advanced propulsions. So we've also seen another trend that green bond issued recently have been oversubscribed by about 5 times or even sometimes 10 times, which indicates the changing investment pattern by consumers, which are mostly financial institutions and such qualified investors who want to have a greener investment portfolio. So thank you everyone. This is our view on the Fit for 55 and its impact on the changing pattern for investments and funds raising.
Thank you, Monika. That was very insightful. Thank you for giving your time. We will be back soon with another episode of AFT Podcast. Stay tuned. Thank you.